Welcome, everybody. Good to see you. Hey, it's a Wednesday. Wonder if that British pound's going to move. Wonder if that Canadian dollar's going to move. Quick data check. Well, first of all, it is, like I said, Wednesday, September 14th, 2016. It's 7:30 in the morning. It's a couple of hours before the New York Open. It is approximately London lunch. A good time to realign our satellites, get together as a community here at Forex.Today, and get our strategy zone. Quick data check. S&P 500 up 0.25. NASDAQ up 0.35. 10-year T-note flat, but at 1.73. Wow, holy moly. Don't you remember like 10 days ago we were at 1.4? Now we're at 1.75. Holy snap. Kind of feels like interest rates went up 0.25%, huh? What do you think? Is that a coincidence, guys? Yeah, Ron, the Wayne in Spain. Yeah. What an amazing coincidence, right? Hey, is my mic on? I guess so. Yeah, all right. Nobody cares about that, huh? Wayne, I'm just a currency trader. I don't care about bonds and bond yields and interest rates going up. All right, fine. You do what you do. All right, oil up 0.33%. VIX right now sitting at 1780. Here's a morning cough of mine. 1780. That's up 14.25%. Gold essentially flat, 1325. Up a tiny, just a tiny bit. But again, I want to talk about that 10-year T-note before we get going. I mean, 1.75. We were at 1.4 just 10 trading sessions ago. How do you get interest rates to go from 1.4 to 1.75? You got to dump bonds, guys. You got to dump bonds. Sell. Well, the world, and I mean the world, has been locked into bonds for a long time. Now, do you remember 2 weeks ago? Gee whiz, this cough. Do you remember 2 weeks ago, maybe even a little bit less, more than a week ago, I showed you the spread on the 2-year, 30-year Japanese government bond yields? And I said, aha, this is important. It hasn't been important before, but today it's important. Anybody remember that? Andrew says yes. You missed that day? Yeah, we covered it. The spread on the 230, not the 210. Not a 10 spread, but and specifically on Japanese government bonds. And I said, aha, this is interesting. This tells me interest rates are going up. But I didn't think we'd go from 1.4 to 1.75 in days. Holy crimoly, that's a huge move. Redonkulous. Let me put it this way. Let's say 2 weeks ago you started a process of getting a mortgage for a house. And they came to you and they're like, yeah, we can get you in a mortgage 3.75, 30 years. And you're like, oh boy, that sounds good. What will my mortgage be? And they're like, it'll be $1,000 a month. And you're like, oh, that's a really good deal. Lock that in for 30 years, right? So it takes 3 weeks to get the paperwork done and everything, and finally, right on the last day, they're like, okay, well, we have to adjust the rate, of course, because interest rates have changed. You're like, okay, yeah, we've been at 1.4. What is it now? 1.44, 1.45. They're like, no, it's 1.8. So your mortgage is going to be $1,200 a month, and over 30 years, you're going to have to pay, literally $90,000 more, or whatever it is, right, over 30 years. MRC, we already did it. So I can't show it to you because we already did that a couple of weeks ago. So just Google Japanese government bonds and look at the difference in yield between the 2-year and the 30-year. And that's called the spread, the difference between the two. And that spread was going up exponentially, and one of the things we talked about was the slope of the long end of the yield curve. Holy smokes, that makes you guys sound smart. What an amazing conversation to have had. And all of a sudden, interest rates have skyrocketed. So anyway, so you thought you're going to get a cheap mortgage, right? And 2 weeks later, you signed the paperwork, but it's $90,000 more expensive. You just lost $90,000 in 2 weeks. That is amazing to me. How does that feel? Put that in your pipe and smoke it. Huh? I mean, that's a big deal, right, Ron? Well, imagine it was a billion-dollar project. Or how about this? Gee whiz. Sorry about that, guys. It's weird. It's just a cough that is in the morning. Anyways, and it's way low, so it just comes up. But anyways, oh yeah, what was it? Bayer just bought Monsanto. I think is that right? See, one thing you do when money is cheap, and in particular when you think money is not going to be cheap anymore. Well, I guess it depends on what currency price you're in. Maybe it was 65. Okay, we'll say 65. All right. So when money is cheap, guys, it's a great opportunity for a corporation to just simply borrow a lot of cheap money, like $65 billion, and buy something while you can, because the money is dirt cheap. It's almost free. You understand? Yeah, it was 56. There you go. Told you. Right? All right, so let's say they finally do this deal, and Bayer goes out to the market, issues some bonds, right? They call that capital market origination. So they go to the capital market, and they want to raise some money by issuing bonds. So they hire an investment bank. They go out into the world, and they raise the $56 billion. But let's say it took 2 months to pull this deal together. Really, it'll take more than that. But let's say it just took two months. But interest rates went from 1.5 to 2.0. Because the Fed was expected to raise interest rates, and then they did raise interest rates, and then they said something when they raised interest rates to indicate that they're likely to raise interest rates again soon. So all that gets priced in. And all of a sudden the deal gets done. What's the difference between 0.5% on a bond for, let's say, 10 years and 2% on a bond over the course of 10 years? So now you have to pay 0.5% more on $56 billion. That's some FU money, isn't it? I mean, that's a lot of, Toyota Corollas, isn't it? Yeah, 33% more expensive, right? You're like, on $56 billion? You know what? You should have timed it a little bit better. Somebody needs to have their head chopped off in the finance department, right? Or, someone at Monsanto was playing too hard to get, and now maybe they're not going to get a good deal. But whatever. I'm just saying, in the real world, that's extremely important. When you go from 1.4 to 1.75 in 2 weeks, the nice thing is, at least you and I talked about it just at the cusp of it starting to happen. And most people, I think, on this planet had no idea. Just like not even, on the radar screen because they didn't even have a radar. They didn't even have a radar tower. They don't know what a radar is, right? So anyways, I hope you like being smart money. I hope you like being a client of TradersWay. Remarkable timing on that, huh? Hey, listen, shh. Don't talk, just listen. Trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of results, but please always stay small, stay humble, and focus on the long term. Hello, my name is Wayne, the Chief FX Market Strategist for TradersWay.com. Before this, I ran a service called FX Bootcamp for many, many years. Yesterday, just for fun, we listened to a testimonial from like 13 years ago. It was just funny. It was just really cool. So I've been doing this a long time, and I'm here to share. I work for TradersWay, and here's my job description. Make you successful, improve your skills, make you confident in those skills, and when you are ready to trade a live account with real money, that you'll have the confidence to get out of the bed in the morning and trade that live account with TradersWay.com. And they don't want people to like pop in $3,000, blow it out in a couple of months and disappear. What they asked me to do is say, hey, when someone opens an account, puts $3,000 into it and trade it, wouldn't it be nice if they could trade it successfully for 1 or 2 or 3 or 4 or 5 decades and grow the account and slowly but slowly increase their lot size as their account grows? And I said, I love your mission. Miles says, couldn't find a link to that recording? Hang on a second.
On 1200 GMT, taking a look at European equity markets continuing to trade generally in positive territory, but the gains are modest. Euro stocks is up less than 0.25%, while the DAX is up about 0.4%. The FTSE, best performing index bourse today, up about 0.6%, helped by some of the mining names. We did see some generally mixed corporate news out of Europe earlier. The Nikkei finished down about 0.75%. Much of the focus there continues to be on potential Bank of Japan action. We've seen various press reports once again quoting sources, advisors, and sources surrounding the BOJ and government on just what the next move will be. Shanghai finished down about 0.75% as well. After the close, we saw some positive data out of China. The aggregate financing and new yuan loans rose much more than expected. General positive sign for resilience in the Chinese economy. U.S. equity markets are pointing to a slightly higher open after the big sell-off yesterday, 2126.25 in the S&P Mini. Resistance in the E-mini isn't up towards 2145, 2144.60 is the resistance pivot off of yesterday's numbers. U.S. bond markets have stabilized a bit. The 10-year note future 130.05 half. The high 130.07, the low 129.30, and the U.S. 10-year yield is lower by about a basis point. You've also seen a stabilization in European bond prices with interest rates slightly lower there. In terms of energy markets, crude now drifting back towards unchanged, 44.93, consolidating the move lower we've seen over recent days. We did see a brief spike yesterday following the API inventory figures. The prices are holding below $45 now in WTI. Crude natural gas is up 2%. Copper futures trading up 1% following the better Chinese data. Gold largely unchanged. And the dollar index largely flat after the rally we saw yesterday. The high in the dollar yen was 103.35, and we've seen a low of 102.41. So about a big figure range in the dollar yen trade today, The euro and cable trade has been much more benign. Euro at 112.25, the high was 112.40.
All right, I guess that's that, huh? All right, that was TradeTheNews.com. You should offer a wrap-up, you should say, and that's the end of my wrap-up. Hey, there's a rumor on the street. Right? Then a rumor on the street, Bank of Japan is going to cut interest rates further by 10 basis points. Who'd you hear it from, Ron? Bloomberg? Really? That's pretty good. I guess it's a rumor leaked to everybody, I suppose, then, huh? Yeah. Oh, Kate mentioned it too. Damn. I gotta up my game. Kathy Lee! Right on. Yeah, no, she's smart. I like Kathy. So, aight. All right, so, yeah. All right, so here we are in the live market. And there are very interesting things going on right now on a variety of currency pairs. This one's not quite ready. This is weekly, monthly central. So I don't really want to own euro. That's just me. Pound. It's close. It's not quite as good as the other ones, but the weekly S1. Yeah, okay. I mean, this is a maybe. I've been using this to hedge because it falls farther than everybody else. So what can you do, for example, if the average daily range for the, let's say, pound yen is 3 times more, let's say, than the Kiwi yen, and you're going to use pound yen to hedge the Kiwi yen, what can you do to keep risk the same? Decrease the lot size, right? Right? Yeah, drop the lot. So that you may have noticed that, like, when I'm buying $100,000 lots of Kiwi yen, but when I'm hedging pound yen, I'm selling $25,000 lots on this. But on this one, this drops 333 pips, right, in a day, and this drops 60 pips in a day. Isn't that nice? Wicked smart, right? But the thing is, at some point, if you're ultimately a bull, you may want to try to get on this one. The problem is, it's very emotional where you can be up 300 pips and the next day you're out at break even. And then you start messing with your psyche, right? And you're like, why didn't I take the 333 pips long, right? Well, because that's not your strategy. Your strategy is to stay long forever. Right? No, Russ, it's not 3 times more on Kiwi. Kiwi's just standard. But I don't need to... Gold, dang it! Where does that cough come from? I think maybe in my old age I've developed allergies. Is that even possible? Do old people just wake up with allergies? No, I'm probably just pulled a Clinton, right? I have pneumonia, something like that. But Yeah, Kevin says yeah. Yeah, it's possible. All right. Golly, am I getting old? Yeah, allergic to cigars. I haven't had a cigar since last night. All right. So, anyways, what I'm trying to get at is if you're a bull, you need to be doing, like, you should be, like, freaking out right now. Okay? By the way, did you guys trade South African retail sales? Ron's freaking out. Good. Thank you, Ron. Because if you work for me, Ron, you know, I want to pay people to freak out for me, right? So if you're not freaking out, you know, I need to throw you out the window. So anyways, month over month retail sales down 0.4%, negative 0.4%. So apparently I spent too much money in South Africa on my recent trip. So when I leave, South Africa feels the loss. Year over year, check this out, guys. I don't know. South Africa needs some economists. Anyone going to get like an economics degree for South Africa? They were expecting 1.9% year over year increase in retail sales, and they only got 0.8, like less than half. Yeah, Lawrence. Yeah, his fundamentals have really improved. But then again, I forced him to get a Series 3. And Kurt did too. So that probably whet his appetite like it did mine. So anyways, I don't know how you could be an economist and say, yeah, based on my numbers, it'll come out 1.9% year over year, and it comes out 0.8. It's like you didn't even have the right variables. Like, what's your model? Like, clearly it didn't work. I mean, not even close. You could have thrown a dart at the wall. Series 3 is a test in the United States of America, right? Issued by the National Futures Association. For those who would like to trade, first and foremost, futures, and as a subcategory, bastard stepchild, also the foreign exchange. Okay? And so if you trade other people's money in the foreign exchange or the futures market, you need to take a test to say that you're qualified. In fact, it's not really true. What it is, it's a test to ensure that you know what the regulations are. How many years do you have to keep your disclosure document in the filing folder? How many years do you, blah, 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 blah. That kind of stuff, right? That's what the Series 3 is. And then if you're a foreign exchange trader, you also have to take the Series 34. But I'm so old and I've been trading foreign exchange so long, I'm exempt from that. Amazing, huh? So anyways, I think you should be watching this. This is the stuff that you wait for, guys. Now, commodities are a tough one, right? Nobody wants to be in a commodity currency. But maybe you buy when there's blood in the street? No, I don't. I don't like that idea, right? But Is this an area in which you would expect support to be seen? Like maybe Monday morning, you would have said, oh, well, there's downside support way down there around 77.50. Right? I mean, you would just, it's a fact, right? I mean, it's not even a question, it's just a simple fact. So, like, if you're a bull, that would be essentially the only place for you to even consider buying, because you would have hoped to have, if you were a bull the other way, earlier in the week, you would have hoped for like a move like this, right? Well, clearly you never even had that chance. So that you don't even have to worry about. So you look at the double bottom, then you're like, oh, a reset off the 200. There's potential because that high is higher than the previous level of resistance. So this area here could become support. And then, of course, this area is the ultimate area. And just the general rules of engagement here is to either look for a bounce this way, but more logically, it's going to be this way. Okay? And traders are just using this area, of course, as support. Okay? And this is also a cluster of monthly M2, weekly M1. Could be an important area right here. And that would be like a launch pad, wouldn't it? And the other third part of this that may also be of note is, what is my general rule, not even a rule, my general outlook for when you hit the weekly target, which is this green zone, early in the week, like a Monday or a Tuesday. Back to the weekly central, which is up here. So that doesn't always happen, and that's why I don't even want to call it a rule, but it's something that's been observed many times before, right? So you could look at it and say, well, that's very possible, but not until I get a higher high, higher low, 1, which is the double bottom, 2, the higher high, and 3, the retracement. So, and you're already bearish on the Japanese yen. I don't know if you're a bull on CAD, but if the yen weakens, a falling tide lowers all ships kind of thing, right? And the cool thing is, if CAD stays relatively weak, but the yen is generally weaker, then this just slowly moves up. You never make a lot of pips. Okay? Which means you could possibly just forget about it. You keep logging in and, oh, it's only up 30 pips, maybe per day, right? But after 4 weeks, you're only up 150 pips. Just nothing seems to be really happening, right? As fast as the yen weakens, the CAD seems to weaken just as much. So nothing's really happening, except you're collecting 150% interest every year, and you're not even worried about it. You're not even thinking about it. You got your stop at break even, so you actually don't even really care. I mean, you want it to stick, because you don't want that high interest to go away. I mean, 150% a year is not bad for some people, right? Why doesn't Bayer just put $56 billion into a deal that does that? Now, of course, you'd have to leverage 56 billion 100 to 1. All right? So why didn't they just put down $5,600,000,000,000 in foreign exchange? Right? Like, why not just do that? Hey, boss, I got an idea. Why don't we leverage that 56 billion 100 to 1? Hey, that's brilliant, Bob. Yeah. Wouldn't that be great, though, if you were that dumb and you did it, and then the currency pair just takes off, and right, your broker calls you, you've turned your 5 into 500 trillion. See what? Whoops. Yeah, what could possibly go wrong? Yeah. So anyways, did you see all of that, by the way? Does anyone have this on Forex.Today as a potential trade idea? You should. Jimmy did? Right on. Oh, say, can you see by the dawn's early light what so proudly we hailed at the twilight's last gleaming, who brought strife and blessings. All right, so let's go to today. Today is going to be the day that I'm going to come back to you. By now, you should have somehow realized what you got to do. Okay. So, take a look at things that have happened. Japanese industrial production, pretty pathetic, huh? I still think it's the ECB's fault. But perhaps the ECB's playing the Fed. And they're like, why should we do something if the Fed's going to do it for us? You see the chicken and the egg there, or maybe the plain chicken. Maybe it's not chicken and egg, it's plain chicken. Two central banks running right at each other. The ECB wants the euro to weaken. There's two ways of doing it. Change your monetary policy at the ECB to weaken the euro, but that costs money and therefore risk. Or the Fed raises interest rates and the euro weakens relative to the US dollar, to the reserve currency of the world, and the euro weakens and it's risk-free for the ECB and doesn't cost any money. Huh. Which one would you do if you were Draghi? Okay. Unemployment rate 5%, 4.9. Great. Great. Yeah. Import prices, export prices. So I like lots of imports. Love lots of imports. Who imports stuff? Poor people or rich people? So if you go back to the year, I don't know, 1200, Europe was pathetically poor. Agrarian society, and 95% of the people in society were farmers. India and China, in comparison at that same time, were very wealthy. So like if the Europeans basically spent all their time just producing grain and milk and cheese. That's it. And when all that was consumed, there was nothing left over for anything. Right? Maybe the king had something. But where did the king get his cool stuff? Remember, when you're rich, you have cool stuff, right? You have awesome stuff, like amazing stuff. Silk tapestries and heavy curtains. Look at the curtains, right? And the rugs. And where is he getting all these things that require manufacturing skill and technology? Well, he sends his people shopping, and they go to Venice, because Venice at 1200 was way richer than Rome, way richer. And who were they trading with? They had the largest fleet in the world, merchant traders. They didn't even have a king, they had a city council. They were capitalist pig dogs. They had a city council, they didn't have a king. They had a doge, but he was elected. So Venice traded down the Adriatic to Istanbul, Constantinople, Istanbul, Constantinople, blame it on the Turks, right? Istanbul, Constantinople. So they'd send their ships down there, ready to buy stuff for all the kings of Europe. And who also hung out in Constantinople in 1200 AD. China and India. And guess what they brought to sell? So the Venetians were there to buy silk, spices, tea, all these fabulous things that Europeans couldn't produce because by and large Europeans were poor. They were peasant farmers. They were serfs, right? Working for their lords of their manor or their kings, right? So what happens when the average Joe starts to have excess wealth? For example, a farmer breaks away from his lord and gets his own land, starts to use better techniques for his farming, and suddenly produces twice as much grain as he could possibly use for himself. So he goes and he starts selling that grain, and now he turns that excess capital or that excess production into money. And so in the first year, he fixes up his house. Second year, he buys some more land. Third year, he hires some people. Fourth year, better techniques, better tools. So he increases his technology and increases, capacity for production. And has even more grain than he possibly needs. And all of a sudden, he's becoming fairly wealthy. Now what does he want to do? He has an increased wages, increased wealth and income, and his marginal propensity to spend increases. So now he wants to buy some stuff. But the cool thing is, now less people need to be farmers. They could be school teachers. They could be inventors who invent better technology for farming to increase yield per acre even more, making the farmer even richer. So on and so forth. You see this? So now suddenly Venice is going to get even richer because now everyone's going to Venice and they're like, I want to buy some awesome stuff. Right? I want to buy some awesome stuff. What do you got, man? Oh, well, we were just in Constantinople. We got some spices and, all this kind of stuff, right? And you can see how if you import a lot, it's because they're filthy, stinking rich. Because whatever you do, whatever you're producing it better and better and better, more and more efficiently, and you have excess, and you trade that excess now. So not only are you buying stuff from Constantinople, well, if everyone in China and India is so rich that they're making silks and stuff like that, which is a highly skilled manufacturing process, then they're probably short on basic labor. Like, they don't have enough grain farmers. So suddenly, like, Europe's like, oh, well, we got a lot of grain, but we don't have any spices. We don't have any silk. We don't have any gunpowder. All right, so all of a sudden grain is going to China and silk is coming back. It's pretty cool stuff, right? And so when you're rich, you import. You import, right? And when you're poor, you export. And usually what you export is just cheap junk. Grain, right? So anyways, so I look at this data, and I've always told you a huge trade deficit in the United States is what I want to see. Well, it depends on what they export, Cash. Depends on what you export, okay? If it's grain, for example, then it may indicate that the bulk of your society is agrarian. Is there any, like, how about this? Let's go all the way back to 1200 again. What was the UK doing? What was its principal export? Besides, yeah, Christianity and Viking babies, right? Yeah. Oh, no. It was raw wool. Apparently, the UK has a great climate for raising sheep. No. No, Russ, you're hundreds of years off. At this time, at 1200, the UK was poor and pathetic. Okay, William the Conqueror walked in and was just sitting on everything. Now he's dead, an old man, so his offspring are running England, but nothing generally is happening on an international level. Okay? They were hundreds of years off from any terror and domination at that point. Right? They're fighting each other. All right, so raw wool, guys, and that's it. And where did they send the raw wool? Italy. Why? Italy had looms and weavers. Yeah, well, look, that's why I'm here, Russ. I'm trying to explain import-export prices in a way that everybody can understand and appreciate. I mean, how else am I going to do this, guys, right? All right, I'll just tell you what it is. Blah, 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 blah. I will give you the formula and say, okay, this is just a subcomponent of GDP, and that's why that's important. And you're like, Wayne, I still don't get it. All right, so I'm doing it in my fun way, right? So anyways, the UK would export raw wool to Italy. Italy would import that. Italy had the skill and technology to loom raw wool and then weave it into beautiful textiles. England would just simply, let sheep reproduce and then once or twice a year shave them. Yeah, right? Yeah, using a skill and technology that's been around for 4,000 years. Yeah, good job, UK. Yeah. Are they adding any value, really? Right? What's the value add? They shaved the wool off a sheep. You get it? What did Italy do? Oh, well, they had to clean the wool and process the wool and then spin the wool into yarn or into thread, and then from that you got to do this and do that. All of a sudden they're selling you beautiful clothes or beautiful tapestries or beautiful rugs, and their value add is tremendous, and therefore the income and wages in Italy are going to be way higher than the income and wages in the UK. So just imagine comparing Rome to London. You get it? At that time. So the principal export, the UK exported grain and wheat, like grain like wheat and barley, used for making bread, used for making beer, but they didn't export very much of it because they needed it themselves because the yield per acre was low. You understand? So that all that work simply went into staying alive. So how do you get filthy, stinking rich if all your work is just staying alive? Well, why do you sit there and scalp 12 pips here, 22 pips there, and at the end of the day, you're like, I made 56 pips. Guaranteed poverty. It's like being a farmer and producing the food you need to live, and then that's that. You understand? You're not selling excess capacity. You have to increase your yield so that you have excess. And then you can live off that excess by trading. Yeah, sorry, Eds. Well, I'm trying to explain export prices because you guys gloss through this. I just see it. You're like, I don't know what that is. Okay? And then you hear in the media, oh, the US dollar is going to be worthless one day because look at the trade deficit. How many times have you heard that? Maybe not in the last couple of years, but if you've been around as long as I have, there used to be times where like, yeah, the US dollar is like toilet paper. You've never heard this? Look at the trade deficit. There's such an imbalance. America is so far in debt. Right? Yeah, because they're filthy, stinking rich in comparison to everybody else. That's funny, Paul. All right. So anyways, why? Well, again, think of the British farmers in 1200 AD. You guys ever see the quest for the Holy Grail? There's two guys standing in the street, and a guy at night wearing, he's got his armor, and then over the armor he's got beautiful white cloak over him, and he goes by on his horse. Well, of course, it's not actually a horse. They're banging coconuts together. And he goes through this town, and the town is filthy and just ankle deep in mud, and they have mud in their hair and on their face, and their clothes are all ripped, right? And he says, oh, he must be king. And the other guy says, well, how do you know he's king? And the first guy says, well, he's the only guy without shit all over him. Bleep that out for your kids. Right? Yeah, bring out your dead. That's exactly the scene, right? Bring out your dead. So that's actually probably 1300 if you know the year for the Black Death. So anyways, so I can carry on for hundreds and hundreds and hundreds of years, right? But anyways, think of that scene, and that's someone that has no spare capacity or no spare, or let's say excess production to trade. Now, when you trade that, you trade it for wealth. And unrefined products that have no value add, or they're only going to get you a little bit. But when you have nothing, at least now you have money, right? And then the upper class eventually starts buying stuff they can't get in their local economy of peasant farmers with low skill and no technology. So where do they get their awesome stuff? Where does the king get that white robe? And where does the king get all these, this fabulous armor and stuff. Well, from an economy that has skill, and you're going to have to now spend your money there, right? So you're selling your excess production, trading that for income, spending the income by importing expensive stuff, or stuff that is just cheaper, for example. So, and there's a virtuous cycle to the whole thing. So, long story short, I want to see a huge trade deficit. I want to see the United States import lots of stuff. Because, for example, BMWs, Mercedes, Porsche, Ferrari, Maserati, Lamborghini, they're just cheaper now than they have been in a long time because of the foreign exchange. And that's that. They're like, damn, I feel really rich because those cars seem a lot cheaper now than they were just a few years ago. I think I'll get one. And you import it. Right? Or you're looking at, a Mustang, and you're like, $50,000 for a Mustang? And then you're like, well, I'm going to go look at some other cars, and you go shopping for $50,000 because you're like, $50,000 is a lot for a Mustang, right? And you $100,000 for a Corvette, really? And all of a sudden you start looking around. No, Ed says Venice was really run by the Vatican. Absolutely, totally not. Absolutely not. Unless you're talking about 300 AD or 500 AD. No, if you're talking, let's say 1000 AD and forward, absolutely, totally not. Absolutely, definitely an independent republic, per se, a city-state. Yeah, I'm sure in South Africa, Mustang's a expensive car. But then you get in it, plastic. You get in it smells like a Walmart. Anyways, so there's my little digression, but I hope you, at least now when you look at import-export information, maybe you look at it a little bit differently. Who's benefiting? Well, they're both benefiting, right? Whoever's exporting has excess capacity or excess production, I should say, and they're converting that into currency. And the rich people are sending that currency to them. Okay? And some people need it, some people have it. But it all works in the long run. And what you'll see over history is that the UK would send all their raw material to, let's say, Italy, and then buy expensive stuff from Italy. But then that money goes back to the UK, and after maybe 100 years of them doing this, or 200 years, because the economies grew really slow back then, eventually they're like, hey man, we've been sending our wool to Italy for like 200 years. We got some wealth now, and maybe we should, like, I don't know, turn our wool into textiles ourselves. Why don't we build our own looms? Why don't we develop a primitive industrial society on the domestic level to turn British or English wool into English textiles, and then just sell it here? And somebody says, brilliant! Just brilliant. And things start to shift. Now they don't need to export so much. Okay? And so the same thing, after World War II, Japan was desperately poor. So we use them for cheap labor. And then they had rapid expansion in industrialization. And lots of foreign investment went in. And Japanese stuff went from cheap garbage in the 1950s to, by the 1980s, Japan was buying the United States. Now think of that. We nuked them in the 40s. In the 50s, we were rebuilding the economy. In the 60s, they were going from making trinkets and Bart Simpson t-shirts to suddenly things like reasonably decent cars or reasonably decent stuff. By the 70s, it was actually pretty good stuff. It was better than American stuff. And by the 80s, Japan was buying the United States because Japan was rich. Think of that, guys. Do you know how long that used to take? That used to take 300 years, not 3 decades. Who was next after that? How about South Korea? All right, here comes the data. Import price is lower. So that's your euro and your pound. We might have imported the same amount of stuff, but the prices have fallen. So that reflects the British pound, for example, and the euro. Okay, I don't have, that's the imports. I don't have export data yet. Okay, South Korea, very similar situation. You might even want to throw Taiwan in there at some point. Pathetic economies, absolutely pathetic economies. Remember, in the 50s, we had the Korean War. So in 1960, South Korea was pathetic. It was in shambles, right? We rebuilt that economy, made that democratic, made that capitalist. It attracted money and investment, and they built an industrialized economy, started making real products, exported that, increased their wealth through wage growth, and productivity went up, and more excess stuff to sell, more investment, more technology, and now they're great. In fact, I don't know, 10 or 15 years ago, I was hired by the government of South Korea to help them build their venture capital, or at least consult. It was a small gig. Consult on how to build things like venture capital and investing into young entrepreneurial enterprises, and I consulted with 7 different startups and met with some investors and a lot of different CEOs and did a big speech. And let me tell you, South Korea is awesome. But in the 1950s and the 1960s, it sucked. By year 2000, it was great. Same thing with Taiwan, right? Great. And so what's happened in the 90s and the 00s and today? Where's all that investment going? Well, cheap crap used to come out of China in the 90s, right? You can get yourself some tennis shoes and some suitcases and some umbrellas and folding lawn chairs and Bart Simpson t-shirts, and now, you know, wages have gone up and income's gone up and middle class has been developed and cost of living's gone up, and and therefore and food prices have gone up as diets have changed. So suddenly now a Chinese worker needs to make more money. Plus now they have kids. They went for a while where you didn't even have kids. So suddenly they have kids again. You need larger apartments. You need health insurance, or at least money to pay for health costs, and everything's going up. And so now a worker needs to make more money because they're older. They have more expenses. So wages are going up, the costs are going up, but also the quality is going up because now the workers are skilled and more investments going in through foreign direct investments, so their factories are better technology, better quality, better yield on their production, and all of a sudden that economy has gone from 0 to hero. Again, not in 300 years, but in 20 or 30 years. And you're right. And now what? China shows up and they want to buy America. Well, it's been like this forever. So who took out the Venetians? If the Venetians were so rich, trading for Western Europe with the Middle East and to the Far East, who replaced Venice around 1300? Hint, hint, hint. Wink, wink, wink. Not even 1300. Maybe it was 14. So somewhere in there, it was the Portuguese. Lisbon got filthy stinking rich. So, anyways, export prices, guys. There you go. There you go. There we go. Hopefully that. So, I guess today's whole lesson is going to be what does import and export prices, or just the index in general, what does it mean if the United States is importing less and exporting more? Weak dollar. Okay. Well, sometimes I stick to these things because you may just not know, right? You may have actually learned something, right, today. I don't know. Yeah. So I don't know. I hope you don't mind that I grab onto some of these things. So GDP coming out for the NZD. I'm hoping that's going to be good for me. I'm still long and strong. Okay. And Aussie jobs report, as you know, skippity scalp, mickety mac daddy, make you want to scalp. Okay. I learn a lot every day. Well, right on, man. That's why I'm here. I hope that wasn't too colorful of a way to explain it. So the Venetians got wiped out by the Portuguese. And their next door neighbors in 1492 kicked the Moors out of Spain. So now they were free to compete with the Portuguese. Right? So you got, right? So the Moors have to go back to North Africa, fine. So they get kicked out of Spain. The Spanish now control all of Spain again. And then it turns out their little next door neighbors kicking butt, replacing Venice with the spice trade out of the Far East, right? So what does Spain do? Well, Spain was broke. They were in wars for hundreds of years to get the Moors out. So they're broke. They can't fight with Lisbon because Lisbon now suddenly is like the richest city in the world. We're totally replacing Venice, who had been the richest place in the world for about 400 years. So all of a sudden Lisbon is super rich, and they're investing that money into warring technology, into a fleet. So Spain has to do something. Well, right? So remember, the Portuguese were replacing the Venetians so that they were trading with Constantinople, but they were going all the way around, and they're in Asia. Right? So you can go all the way to India, and all of a sudden they're like, welcome to India, it's Portuguese, right? Have you ever been to Goa in India? It's Portuguese. You're like, WTF, I'm in India. It's all Portuguese. Didn't know. Boom, right? Well, an American wouldn't know that, right, Shug? So you're like, yeah, even Indonesia. Yeah, well, you know, a lot of people just don't know that. So you all of a sudden you got the Portuguese over there because they're trading, getting filthy, stinking rich, replacing what the Venetians did. But remember, the Venetians in 1100, let's say, didn't have the type of ships that the Portuguese had in 1400. You see what I mean? So all of a sudden the ships were better. They could carry more and they were safer. Anyways, so they're settling Asia. So what are the Spaniards going to do? Compete with that? No, you can't compete with that. They'd get slaughtered in a war against the Portuguese. So where did they go? Around 1400, 1392. So around 1500. Let's go to the New World, right? All of a sudden they're all over Latin America, right? Central America, South America. And they're settling all this stuff. What did the Portuguese do? Holy crap, what the hell are the Spanish doing? Hey, 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 right? So they got to get to South America as fast as possible to compete. So where'd the Portuguese go? Brazil, yeah. So showdown, doesn't that sound like a showdown? Oh no, you didn't. You didn't come down to South America, did you? Oh yes, I did. What you go to do about it, bitch? Right? And all of a sudden, you got yourself a little Spanish-Portuguese war. Who ultimately wins? Little tiny but fabulously wealthy Portugal? Or super huge, up and coming, I got gold Spain? Well, of course, yeah. Right? Spain wins that war. Portugal fades into oblivion. And then what? What's going to happen now? Who gets threatened by this? Now, Spain's fabulously wealthy and stinking rich, taking over all the Portuguese trading routes out to the Philippines, right? But also taking over all of the New World, except for these small colonies on the northeast and, or I guess, east coast of the United States, well, of I don't know, North America. Yeah, but even before the UK, because remember, they were not that rich yet. So what happened was the French and the Dutch and the Belgians, I guess, except I don't think Belgium was a country at that point, but that part of the world, they were trying to also get their own colonies, right? So they're in Africa, right? You see what I mean? So the French and the Dutch, they're in Africa trying to get their own colonies because they're trying to catch up with the Spanish and the Portuguese that have settled all of this stuff. And they're like, wait, we need colonies too. So once Spain defeats the mighty Portuguese, and the Italians are not even in the picture, now the northwestern Europeans, the English, the French, the Dutch, they all get together and battle the Spanish. And then once the Spanish are defeated, then what? Then the English, the French, and the Dutch all have to fight each other. And then what happened to the Dutch? The Dutch get conquered. So then what? The English and the French fight it out. When did that end? 1815, Battle of Waterloo, Napoleon gets defeated. Booyah! And when does the UK get fabulously stinking rich now? Remember, up to this point, they were not fabulously stinking rich. In 1700, about 1840, 1850, about 25 or 30 or 40 years after Napoleon was defeated, there was nobody left, and the English could start building their industrial revolution. Oh my God, did I just go through 1,000? No, I guess that's only 800 years. Did I just go through 800 years of economic history? Gee whiz! Well, at least now you know a little bit about import-export prices and international trade. Well, wait, okay, Miriam. The British East Indies Company was part of the British mercantilism policy of having a monopoly in trade with that colony in the Indian colony. But that wasn't until, by the way, it wasn't 500 years. It was like 150 to 200 years. And I think what you're looking at then, let me guess, maybe 1800. I mean, maybe on a smaller scale, 1750 to 1950. At night, but even that's a bit of a stretch. But yeah, well, not 500 years, maybe 150 years. And of course, it would have started small and then it would have gotten big and all that kind of stuff. But for example, they may have imported, textiles and stuff and tea and some spices. But when did, the UK really start to build an industrialized economy in India? Well, when did the Industrial Revolution start in the UK? But it wasn't until after 1850. It's more like 1840. So like they didn't really truly get serious in India until they already had their technology developed. So really we're talking 1880. Okay, you see what I mean? Right? Yeah, well, that's why I say 1950, right? So really, you're really talking about 1850 to 1950. So you said 500 years. Well, really, not. I mean, yeah, there's that 100-year stretch. Now you're talking 1780. Sure, the British would have been in India and colonized it, but it would have been different. So like the Indian textile industry was basically women sitting on their front porch, not giant factories, right? And you had some wealthy elite British, but it didn't really get to, it got to the point where the British East India Company not only had a monopoly in trade, but actually the British government said, you can actually now run the country for us. Okay, and that's a serious change, right? From trading with Indians to running the Indian economy. There's a big difference, right? So anyways, but it certainly was not 500 years. But I've taken up too much of your time. I hope you at least found the history discussion about how an economy grows and how you create an increase in wages and therefore an increase in income so that you can increase your marginal spending or your marginal propensity to spend. And at some point, you're going to, if you have excess money, you're going to want stuff that you can't get in your own economy. So you want to buy stuff from other people's economy. And if you're poor and you have money, right, if you're from a poor economy but you have money, you're going to need to import cool stuff from other people. And if you're rich and you got and all you have is expensive stuff, well, why would you buy grain from a farmer if you're Italian? You're like, grain from a farmer? I'd have to pay that guy like super high wages. I don't want to buy a bunch of expensive stuff from an Italian farmer because he wants to be rich like me. So I'm going to have to pay him a lot of money. Well, I can just buy some grain from any idiot on the planet. You see what I mean? I'm going to buy it from England. They're a bunch of poor morons, walking around in mud all day. I'll buy their excess grain. They're cheap. It's cheap. So they just import that. You see what I mean? All of a sudden that money goes there, and all of a sudden things start improving in that economy, right? And all of a sudden they're buying expensive stuff. Right? Because it's so expensive in Italy now, the Italians can't afford everything because inflation's so high. So all of a sudden foreigners are buying their stuff. And and it's this great cycle of moving money around. I love capitalism, by the way. And this is why socialism doesn't work. Because socialism, some idiot comes along and says, no. That guy has too much. Let's take it from him and give it to the poor people. And it does not work. Do you know how it does work? Just let it work. Like I've been telling you. These people are poor. They'll produce things that are cheap. They don't have much skill, so they're not going to have much value add. But they're going to produce something. And if their yield goes up, or the production or productivity goes up, they'll have excess, and they'll trade it to somebody who's rich. And the person who's rich needs that because rich people would be too expensive to produce that. Why would you get a guy with a PhD in physics grow wheat or bake bread? Right? So all of a sudden you're like, well, I'll buy that cheap wheat. So now you take the rich person or rich economy takes that, they have excess money, but their costs are high. So they say, well, look, I don't need all this money. I have lots of money. Why don't you take my money, you poor people over there with no skill and no value add, and give me that stuff that you're producing cheap, because I need cheap stuff, because everything here is expensive. So all of a sudden, cheap stuff comes to the rich, and the money goes from the rich to the poor. Fast forward, and all of a sudden, Italy's not that rich, and the UK becomes fabulously wealthy. The Venetians used to be rich. Then, the Portuguese became fabulously wealthy. And then then the Spanish became fabulously wealthy. So on and so forth, right? Let it work. You socialist pig dogs, get out of the system. Stop messing with it, because what happens is you screw up human nature. If you take money from a rich person, why does he have to invent? Why does he have to take the risk and start a business? Why does he have to do anything if you're just going to give all his hard work to everybody else who's lazy? And you may not be lazy, you just might be poor. But I'm just saying, where's my incentive if you're not going to protect my rights and my property? Why am I going to be entrepreneurial if I start Facebook and then you just take all the money away and I'm poor and everybody else got Facebook? I'm like, well, what the hell? I spent like 15 years of my life creating this thing. Oh, well, thank you very much. You know, there's no reason to get up in the morning and make the world a better place. And, right? Especially if you're poor and you wake up and you're like, right, let's take a communist Soviet Union, right? You wake up in the morning, if you go to work, that's great. Hey, let's increase the production capacity and efficiency of this factory. Why? Why would I want to do that? Why? Because I'm going to get a bonus? Because you're, why? Why invest into new technology to increase production? You understand when the Western world finally got into Russia to help them with their oil business because they were so desperate for money that they finally let foreigners in to look at their oil industry, and no money had been invested into the oil industry in 35 or 40 years. And yet it was the only part of their economy producing money. It was the only thing even marginally keeping that country alive, and they didn't invest into the one thing that kept them alive. Holy crap. If that's not proof of artificially moving wealth around so it's all fair, everybody's fair and everybody's equal, it sucks. Don't do it, world. Give people opportunity to grow and flourish and to dream and turn those dreams into reality. And in the long run, everybody is way better. So now when you're in China and you're on a train that's full of commuters, you can see 27 cars in a row. The trains are so long. And there's 1,000 people, and they all have smartphones, and they're all looking down, and they're all on Facebook. Right? Chairman Mao didn't do that. So anyways, hey, gotta go. I'm sorry it took so much of your time. I hope you understand when I say I don't like socialist pig dogs and I love capitalism. What I also mean is entrepreneurialism and the opportunity for you to be great. If you want to be great, I support you. You can be mediocre anywhere in the world, right? Try France. But if I want you to have the opportunity to be great, you have Forex.Today in front of you. You have the opportunity to be great and be better than everybody else if you want to. And in a zero-sum game like Forex, there's huge reward for your unequaled, and that's what I mean by I don't like equality. I like you to have the opportunity to be unequaled in your success. through your hard work and your tenacity to just simply shine and be above average. You understand? That's what I mean. I don't want you to be equal. I want you to be unequaled. And guess what? You get to share 5% of the world here gets to share that $5 trillion a day, or at least the opportunity at it, right? You understand? I don't want you to be equal. I don't want you to be average. I want you to be the top 5%. I want you to try to be better than 95% of other Forex traders. Right? And if that doesn't work for you, try Venezuela. I'm sure the immigration line is very low at the airport. Go for it. So, listen to me. Even if you're socialist pig dog, peace on earth. May the pips be with you. May your profits be above average. Keep working your ass off and get good at this. Develop some skills, save some money, and then when you're ready, open up a trading account at TradersWay.com. All right? Peace.